Hey everyone, do you invest in stocks, especially US stocks? Apple, Tesla, Nvidia, dreaming of hitting it big? Ever thought, I'll sell now, while prices are high and buy back when they dip? Sounds smart, right? Wrong. That's the worst move in the stock market. Why? Because a stock's biggest gains come in just 10-15 days a year, and missing those days means missing the jackpot. Today we'll dive into why you must stay in the stock market and how holding strong in companies you believe in for 5 to 10 years or more can explode your wealth, with stories from investing legends like Peter Lynch and Warren Buffett, plus real-life examples. This is a game changer. Subscribe, like, and let's dive in. First, the key fact. The U.S. stock market, especially the S&P 500, is a wealth-building machine. Over 30 years, it's averaged 78% annual returns. Invest $100 million, and in 10 years, it's $200 million. In 20, it's $400 million. But here's the secret. 80% of those gains come from just 10 to 15 days a year, about 4% of trading days. JP Morgan's research shows that from 1980 to 2020, missing the S&P 500's top 10 days cuts your returns in half. That's not just numbers, it's missing your shot at wealth. My friend Min Soo, a 3-year investor, learned this the hard way. Last year, he sold Tesla at $1,000 thinking, it's too high a dip's coming. But 2 weeks later, Tesla's self-driving news sent it soaring 30%. Min Soo said, I wanted to buy back, but I couldn't stomach a higher price. That's human psychology. You can't buy back above your sell price. He missed Tesla's rally and still regrets it. Ever been there? Let's talk investing legends. Peter Lynch, who ran Fidelity's Magellan Fund for 13 years, averaged 29% annual returns. His mantra? Find great companies and hold them long-term. Take Walmart. In the 1970s, it was a small retailer, but Lynch saw its potential and invested early. Result? Walmart's stock soared over 100 times in 20 years, making his fund a fortune. Lynch said, stocks bounce daily, but great companies rise over time. Don't miss out with short-term trades. Then there's Warren Buffett, the Oracle of Omaha. He bought Coca-Cola in 1988 at $2.50 a share. Today, it's over $60 with dividends yielding over 30x returns. Why? Buffett invests in what he understands and trusts. He saw Coca-Cola in everyone's hands and bet on its staying power. Holding for 30 years made him a billionaire. My neighbor said, I want to invest like Buffett, but daily price swings make me want to sell. Sound familiar? Why is short-term trading a trap? It's psychology. You sell fearing a drop, plan to buy back lower, but when prices climb past your sell point, you freeze. During the 2020 COVID crash, the S&P 500 dropped 34%. Panicked investors sold, but by year-end it rebounded 68%. Those who sold couldn't buy back. I waited for a bigger dip, but it just kept rising, they said. Bank of America's data shows that from 1928 to 2022, holding the S&P 500 for any 10-year period gave a 99.4% chance of profit. Just staying in wins. So which companies should you pick? Ones you're confident in, strong business models, long-term staying power. Take Apple. Since the 2007 iPhone, its stock has jumped over 50x. When Steve Jobs died, people said, Apple's done. But Tim Cook's innovation kept it soaring. A colleague bought 1 million of Apple stock in 2010. Now it's over 50 million. I just held on, he said. Nvidia's another example. Its 2023 AI boom sent shares up 200%. Day traders? They missed it. Here's a real story. My cousin bought Amazon in 2018 at $2,000. It dipped to $2,500 and he almost sold. But he thought, Amazon's cloud and e-commerce will keep growing. He held. By 2024, it's over $3,500. Thank God I didn't sell, he said. It grew on its own. That's the magic of long-term investing. It's not easy, though. When stocks tank, your heart sinks. In 2022, Tesla fell over 50% and Tesla's doomed rumors spread. But it rebounded 100% in 2023. Staying put takes conviction. Peter Lynch said, the market's a voting machine. Short-term, a weighing machine, long-term. Great companies find their value. Buffett adds, buy good companies at fair prices and hold forever. Don't invest blindly, though. Study financials, business models, and competition. Nvidia's 80% AI chip market share screamed invest. Chasing fads, like 2021's NFT craze, burned many. A friend lost half his 30 million won on metaverse stocks. I chased hype and crashed? Conviction, not trends, wins. The U.S. market is a goldmine home to the world's best companies, fueled by innovation. But wealth doesn't come from trading. It's those 10-15 explosive days a year. Stay in to catch them. My colleague sighed. If I'd held Apple 10 years ago, I'd own a house. Don't let that be you. Want wealth? Pick companies you trust and hold for 5-10 years. Lynch and Buffett proved it's the way. Don't fall for trading traps or psychology's tricks. The market rewards patience. What companies do you believe in? Ready for long-term investing? Share in the comments. If this helped, subscribe, like, and hit the bell. See you next video.